Hey everyone, welcome back to the channel. Today we're diving into something that's been buzzing in the global economy, trade tariffs, and their massive ripple effects on countries like Bangladesh. But instead of just recapping the news, I've got a fresh game-changing idea in finance that could totally flip the script for export-heavy nations facing these uncertainties. Picture this. What if we could create adaptive trade resilience funds, special investment vehicles designed to shield emerging markets from tariff shocks while turning volatility into opportunity? Let me break it down for you step by step using the real world drama unfolding in Bangladesh's garment industry as our case study. First off, let's set the scene. Bangladesh is a powerhouse in the global clothing game, with millions of workers, mostly women, stitching together exports that make up a whopping 90% of the country's total shipments. The US is their biggest buyer, but President Trump's reciprocal tariff policies have thrown everything into chaos. Starting with threats of duties tripling to over 50%, American brands pulled back, demanding discounts and freezing orders. Factories halted hiring, some delayed salaries, and protests erupted. Exports to the US dropped by double digits in recent months, and even though the final rate settled at an additional 20%, matching Vietnam's, it's still a gut punch. Workers like Azina Sultana, who's supporting her kids' education on her factory wage, are terrified of job losses. This isn't just numbers, it's livelihoods on the line in a nation where garments drive economic growth and lift people out of poverty. Now, here's where my novel finance idea comes in: adaptive trade resilience funds, or ATR funds for short. These would be hybrid investment funds blending elements of hedge funds, impact investing, and supply chain financing. Imagine a fund that pools capital from global investors. Think pension funds, sovereign wealth, and even retail folks like you and me via apps. The key twist? It uses AI driven predictive analytics to forecast tariff changes based on political signals, trade data, and economic indicators. For instance, in Bangladesh's case, the fund could have spotted Trump's April announcement early and shifted investments preemptively. How? By financing factory upgrades like automation. Harmim Group is already automating cutting processes to cut costs, or diversifying supply chains to non tariff hit markets like the EU or Australia. But it gets cooler. These funds would offer tariff hedging instruments, kind of like insurance policies or derivatives tied to tariff rates. If duties spike, the fund pays out to affected exporters, covering lost margins. In return, factories commit to sustainable practices like Harmeem's solar panels and waste reduction, making the fund appealing to ESG investors. This creates a virtuous cycle. Investors get steady returns from resilient industries, workers keep jobs through tech upgrades that boost efficiency, and economies like Bangladesh reduce their over reliance on one market. It's not just survival, it's evolution. Instead of freezing hiring during uncertainty, factories could use fund backed loans to hire more and train for high value products like premium denim for Japan. Let's think about the math here. Bangladesh's US exports could drop 34-60% with higher tariffs per think tanks like the Center for Policy Dialogue. But an ATR fund could mitigate that by injecting capital for market pivots, say ramping up EU sales, which already outpaced the US. For investors, returns might come from a mix interest on loans to factories, equity stakes in automated ops, and even carbon credits from green initiatives. Risk, managed through diversification across countries, pair Bangladesh with Vietnam or India to balance tariff exposures. Early adopters could see 8 to 12% annual yields, way better than bonds in this volatile world, while doing good by supporting 4 million Bangladeshi workers. Of course, this isn't without challenges. Governments need to play ball with regulations, and funds must navigate currency risks in emerging markets. But look at the upside. In Bangladesh, where political tumult already tested the industry post Hasina's ouster, this could stabilize things. Companies like Rising Group or Denim Expert are already eyeing new markets. Imagine funds accelerating that with data backed strategies. It's finance meeting real world grit, turning trade wars into innovation wars we can win. Wrapping this up, adaptive trade resilience funds could be the next big thing in finance, especially as Trump's policies reshape global trade. It's about empowering the underdogs, workers hustling in Ashalia's factories to thrive amid chaos. If you're an investor, entrepreneur, or just curious, hit me up in the comments. Would you back a fund like this? Smash that like button if this sparked ideas, subscribe for more finance hacks, and turn on notifications. We've got wild times ahead. Thanks for watching, and remember, in finance, adaptability isn't optional, it's profitable. Peace out.